Firstly, we're talking about order block, our entry in order block. So now, in order block, there are 5 things you need to look out for. These 5 things, these are things to look out for before we consider an entry valid in order block. One, another block must take out a liquidity. The liquidity must be taken out. Another block must take out a liquidity. I will see explain in chart or in diagram for a clearer understanding. Secondly, and the last candle has to be engulfed. When a liquidity is taken out, the last candlestick before another block is formed needs to be engulfed. An impulsive move away from the other block, an impulsive move away from the other block. Maybe you jot it down, you write it down on your notes. I mean, to have a trading journal where you write down everything concerning your trade. Now, the fourth one is another block has to lead to a break in market structure. There must be a break in market structure. 5, it must be in line with the market structure. It must be in line with the trend of the market. It must be in line. It must be in line with the trend of the market. Must be in line with the trend of the market. That is what it means. It must be in line with the market structure. That means, for example, now we identify another block, and before you say another block is on a sell momentum, the structure of the market has to be on a sell. So that is for 100% confirmation that this is this. Because some people now, the market will be in an uptrend, and you enter a market on a sell because you got an order block confirmation telling you is a sell while the market is in uptrend. Now you see that the chances of it going in your direction is 50-50. It's not certain, so you have to follow the criteria. I know normally they tell you that order block is once a structure is taken out. Some people will never say when the structure is taken out, you see a bearish engulfing, that is another block immediately. So, but this is a classified or my own method of how to identify an order block, which is very easy. If you just meet up this criteria now, you see you identify an order block with ease. Now, let me get a note. Let me share a white screen for you. Okay, now, so we talked about 5 things to look out for. Now, this is the market moving. So the first thing we'll talk about now is the other block must take out liquidity. I told you have a jota. You must take out liquidity. So this is a liquidity. It's taking it out and coming back here. You can see that this liquidity now is taken out. This liquidity is taken out. The market have taken out this liquidity here. Now you know that the market is an uptrend. Now here you can see here this market now is an uptrend, is in up momentum. So you see when the liquidity is taken, let me clear it very well and explain for you to understand. For you to understand clearer. I'm coming. So now, just give me. I'm coming. I want to get it properly. So now you see that when this thing moves this way, and this place is taken out, there is a takeout of liquidity. Yeah, you can see a takeout of liquidity. Now you can see that the market's moving inside this range and breaking it out here. You see that, oh, this liquidity now has been taken out, or this structure now has been broken. Now if the market is in uptrend and this thing is taken out, the liquidity is taken out, what else are we looking for? We know, I told you, I have 5 criteria now, that once a liquidity is taken out, that means the market now is in uptrend. Are you seeing the market now is in uptrend? Now you can see that this liquidity is taken out. Yeah, she's there. Open. Sorry. You can see. I did. So you see that this thing now, the structure here is taken out. Now if the structure here is taken out, now that is our liquidity. Now the second thing now, we look for the last candlestick should be engulfed. The last candlestick should be engulfed. What do I mean now? So if this is a candlestick, so now when the liquidity, now let's go this way. Now you can see that here the liquidity is taken out. It's a takeout of the liquidity now. Now the last candlestick before of the trend is here. You can see this one now. The last candlestick should be engulfed. You can see that this candlestick now is bigger than this. So I know you are conversant with bullish and bearish engulfing. So this is a bearish engulfing. You can see that the last candlestick here was engulfed. Are you seeing it? The last candlestick here was engulfed. So criteria number 2 has been met. So now say the third one, an impulsive move away from the other block. So now an impulsive move away. So the market should move away from the other block. Then criteria number 4, an other block has to lead to a break of structure. So now once this impulsive move happens, you can see that this structure here has been taken out. Are you seeing it? This structure here has been taken out because it moved away from our other block and took out this structure. So it must be in line with the trend. Now then this is where we will now mark as our what? As our other block. We will now be waiting for market to come back here and respect our other block to sell. Do you understand? Now I'll see explain on chart, but I want you to understand this. So you see that the market is moving now, a breakout of what? Liquidity. Now the last candlestick for this trend now need to be engulfed. That means if we have a candlestick like this, it needs to be engulfed. So you can see this candlestick here was engulfed. Then the market has to move away from the other block. So you see that the market moved down and broke this structure. Do you understand? Now I told you now, it has to be in line with the trend. So let's say that this market is in down momentum, is selling. So now as this structure is taken out, what are we expecting? We are going to mark our what? Let me mark a box. Let me say I'm marking a box here for an entry. So now that this structure is taken out, what we are expecting is the market to come back to this place, then sell. Then this should be our entry. This place should be our entry confirmation, and this place now should be our This place now should be our stop loss. Are you understanding? So let's go on chart. And identify it on charts. I'd never mark it, but we'll look for it together. So the concept there is very, very easy. Is it connected? I'm coming. Okay, it's connected. The concept there is very, very easy. Now let's go to 1 hour time frame. So we look out for the so pardon me, I did not mark it out, so I'm looking for it. So let me give you instance. Now look at this one. Now there is a breakout of liquidity. Are you seeing here? Now this is a breakout of liquidity. Let me explain what I meant now in this thing. Now you can see now we have a breakout of liquidity, right? Now the liquidity is taken out here. Now what is the second criteria after a breakout of liquidity? That the last candlestick must be engulfed. The last candlestick here is this green one now. It means that this red one now needs to be engulfed. This red one now needs to be bigger than this green one. You are meant to be conversant with bullish and bearish engulfing. So this red one now needs to be bigger than this. He needs to engulf this green one. If he engulfed this green one, okay, we say that this is criteria number what? 2 have been met. Then an impulsive move away from the other block. You can see that this move, he moved away from the other block. There is an impulsive move away from the other block. Then the third thing we look out for is what? Another block has to lead to a break of market structure. And you can see now there is a break of market structure here. Are you seeing it? There is a break of market structure here. Do you see the first criteria? It took out this liquidity here. Now it did not give us engulfing. It's not engulf the last candlestick, but I'm just giving you instance now that this trade now is meant to engulf this place. Now it must push away from the other block and it must break a structure, and this structure is taken out. Then let's imagine that this place engulfs. So this is meant to be our what? Our other block. Are you seeing it? Market came back and touched. Our stop loss is meant to be here. Then a sell. Are you seeing it? Then now this one now. Do you see why this one did not go? It was not in line up to the trend. It was not in line. That's why I told you it has to be in line. Look at here now. You can see that the market is in up momentum. The market is in uptrend. Here. So and you can see that. That's why I said if you want to enter, you have to be the last criteria is it must be in line with the market structure. So it must be in line with the trend of the market. So now let's assume now I told that this red one now, and we are assuming that this red one engulfed this green one. So now we have an other block here because the breakout of liquidity this one engulfed the last candlestick. They move away from the other block, a break of structure. So now this is 100% what we are looking for. But the third one, the last one now is it must be in line with the trend. This market is in uptrend and what we are getting is a sell momentum, so it is not valid. The 5 must be complete, and if you can look at it, the market moved up instead. Are you seeing it? So you can say now that this is not valid. It is not validated. We cannot say that this is a complete confirmation of an order block. So that's what I mean by that. So I'll look for other example. But let's even go to 15 minutes so it will be easier to identify. Let's go to 15 minutes so it will be easier to identify. Yeah, we have 15 minutes time frame. Now let's look out for it. Okay. This candlestick should be engulfed. For the last example I gave, the one I use in giving the example, I hope is understood. These two here, but you can see this one did not engulf this one because you can see liquidity is taken out. But this red one now did not engulf. It pushed away from the other block, break of structure. You can see the market came back to this zone again. I see it. The market came back there to, but this is not an order block though. But you can see now, just give me an example. This one now, You can see a break of structure. Look at it here. A break of structure. So let's assume that this red one now engulfed this green one. Then a push away from the other block. You can see this market pushed away from the other block. A break of structure. It broke this structure. You can see this structure was taken out. This structure here, this market structure. If you don't understand market structure, maybe if after watching the video you don't understand market structure very well, you let me know. I will make the video on market structure. But you can see that this market structure was taken out. Then a move away from the other block. Break of structure. The last criteria is it must be in line with the trend. So let's check whether it's in line with the trend. You can see this market now is in uptrend, so it's not in line with the trend. It's not in line with the trend, but the market came back to respect it, and look at it. It took out the other block, which you see is not valid. It's not valid. So let's be looking at, okay, this one is the one we identified. We identified this one. Okay, look at this one. This one, you can see this one now. This is the one we used in 1 hour, but are you seeing now? This is a break of structure. This is a perfect example. This is a break of structure. Then this red one engulfed this green one. They told you the last candlestick should be engulfed. You can see that this red one now engulfed this green one. So now a move away from the other block. So we have our other block here. Our other block is here. So I hope you know, you are conversant with the other block. When the red candlestick is bigger than the green one, that is what the bearish other block. When the red one is bigger than the green one, that is bullish. When the red is bigger than the green, that is bearish other block. Then when the green is bigger than the red, that is what bullish other block. So you can see now that this red one now is bigger than this green one. So we say that okay, this market now have been engulfed. You move away from the engulfing. So this is a move away. The market moved away from it. This structure was taken out. Then it should be in line with the trend, although it's not in line with the trend. It's not, because the market is in uptrend. This market now is in uptrend, you can see. So it's not in line with the trend. So that criteria already failed. Yeah, here. This is where the candle ended. You can see. So you can see it came and touched and sold. Your stop loss should be above here. Your entry should be here. Do you see? It moved away from it. So you can see that the analysis is there, but the last criteria that it must be in line with the trend was not met. So it's very, very easy. It's very, very easy. It's very easy. So with this, my own concept of identifying other block, it might be very hard to find, but when you spot it, it's 100%. When you spot it, it's very hard for it to fail. It's very hard for it to fail. Okay, I've seen one. Let's go. So here now, look at it here. This liquidity is taken out. Are you seeing it now? This is a take out of this liquidity now is taken out. That is criteria number 1. The last candlestick should be engulfed. This red one now. Can you see this red candlestick now? Let me zoom so you'll be seeing it clearly. So you can see that this is engulfed. This liquidity is taken out. So the last candlestick should be engulfed. This last candlestick, this red one engulfed it. So you mark it. Here is our what? Other block. But remember, a move away from the other block, that's the third criteria. A move away from the other block. When the team move away from the other block, it must break structure. You can see that a move away from the other block, this structure was broken. Are you seeing it? You can see a move away from the other block, this structure now was broken. Then criteria number 5, it must be in line with the trend. So let's check the trend of this market now. You can see the market is in downtrend. Are you seeing it? The market is in downtrend. So this is a perfect this thing. So now we now wait for the market now to come back to our other block. Can you see? But it did not touch. So imagine it touched, you could have enjoyed all this peep. Are you seeing it? A break of what? Structure. The last candlestick was engulfed. A move away from the other block. A breakout of structure. Then we know you have marked our other block here. We now wait for market to what? To come back to our other block. You can see now it did not touch our order block. And see, it did not touch our order block. So imagine it touched the order block, you enjoy the market sell, they move away from the market this way. So let's look for another one. Let's look for another one. Let me check volatility 75 to know what that is there. Okay, this is VIX 75. So let's look out for examples here. Okay. We have an example. So now look at here. This is a takeout. This liquidity was taken out. Are you seeing it? Let me zoom the chart. You see it? You can see that the example is so perfect. It's so perfect. I see here now. The liquidity is taken out. Then the red, you can see that this last candlestick was engulfed because this red one is bigger than this green one. That's what I mean by engulfing. So you see that this red candlestick engulfed this one. It push away, so we'll mark here as our order block. But criteria must say, before we say it's another block, it must meet all our criteria. So you say, okay, it moved away from the other block. It moved away from the other block. Then we'll now say a structure should be taken out. So watch, is any structure taken out here? A structure was taken out here. Can you see it? A structure was taken out here. Okay, because this place now broke this structure. Is it in line with the trend? That is the last criteria. Is it in line with the trend? Let's zoom. Let's know that it's in line with the trend. I want to know the general trend of this market. Show the markets. Okay, let me check the 1 hour because this 15 minutes. I see the market is ranging there. Okay. See, the general trend of this market is in down momentum. The market is selling. Are you seeing it? So the market is selling here. So the market is in downtrend. So our criteria has been met because the market is on what? On a downtrend momentum. So you can say that okay, it is valid. So what next are we looking for? The market will come back to our what? The market will come back to our what? Our other block. So now can you see the market came back what? It came back and touched that other block, and you can see how it sold massively. Can see after touching it, you can see it sold massively before coming up here again to take out. So let's know whether this takeout self was valid for us to enter. Let's see. Okay, it did not engulf. But I hope you're understanding this. So with these three or few examples I'm giving you, if you don't still understand, maybe I'll use paper and pen now to clarify everything for you now, so you understand the concept of order block. So this is not like the regular order block. If you enter any YouTube video, you can never find this criteria there, because everybody have different way they analyze. And I'm not saying that all those identification of order block is wrong, but everybody have the particular way they identify their own market. So remember the 5 criteria I told you to write it down. Another block must take out a liquidity. The last candle has to be engulfed. An impulsive move away from that other block. An other block has to lead to a break in market structure. There must be a break in market structure. Then the fifth one, it must be in line with the market structure. It must be in line with the trend. Then you say okay. So you can see all these examples I've given you. You can see how if the market comes, as far as an order block can identify, if it triggers it, it pushes away from that place because it is in line with the trend. Yeah, so I'll be waiting for your feedback.